All right, retail real estaters. We're back here again. The crew, Bob and Rob.
Yes. He's been saving that.
I've been waiting on
Really?
that. Oh, we were going back and forth with the emails trying to set this up. It was like Bob, Rob, Bob. I was like, Rob and Bob, Bob and Rob.
I never got
what's
that.
going on, guys?
Man, just plugging along, trying to slog through it, I guess.
Yeah. We signed up for Vegas ICSC.
All right.
Yeah.
Nice.
We're doing the power day trip though. Flying out at 7 a.m., fly back at
You got to
6 p.m.
change that.
Why?
You need to fly out like Wednesday, Thursday, get a little pre pool pot time in,
Yeah,
and
get a
then,
little party.
yeah, and then Sunday rolls around, and you're like, I need to get out of here.
Yeah.
And the show's just starting.
Yeah. Man, I don't know what it is, but I feel like April and May, there is some kind of event every night.
Yeah.
Well,
It's
and
the spring this event. It's the spring that.
Right. Especially with the kids too.
Yeah.
You add that into it. There's
Yeah.
something always going on.
I've got 2 double headers on both days for 2 kids. Soccer or baseball in the morning,
Yeah.
and then vice versa. And I'm like, it's just constant.
Yeah.
It's constant.
You guys are smart doing the quick in and out.
Now, the only thing I will say is Monday night, there are a ton of parties and
Yeah.
cocktail hours and whatever else.
Yeah.
So if there was any thought about, hey, let's just leave first thing Tuesday morning,
Yeah.
there is a lot of value in being there Monday night.
Absolutely.
With every Team Texas parties going on, the Hendon party's going on, the JLL party. There's a bunch of stuff happening Monday night. So there is a thought of like, just stay one night and then take off.
We'll discuss.
We'll deliberate.
So that's,
But as soon as I booked that yesterday, someone was like, "Hey, you going to this? They're having our neighbor, a guy who lives across the street from you. He's hosting.
Toby?
Yeah, he's hosting this big tech alumni thing in his barn right here
in the party barn.
in the party barn.
Yeah, I love that.
Like, they're like, "Hey, we got tickets for you for this." I was like, "I'm gonna be out of town." Like, what? I was like, "I'm gonna be there." Of course, I'm sure there'll be something else I miss. So, but. Well, Bob, what's going on with the?
Yeah, we'll give our normal kind of recap on what we've been seeing the last month or so. What's changed from some of these key tenants we've been tracking. So, not a ton different, I would say. Starbucks, if you kind of look at, I think I've said this in the past, but we track this a little bit different, just so the tenants that we're tracking. We kind of focus more on new construction, so we filter it a little bit different. But if you look at all Starbucks on the market, there's about 220 single tenant Starbucks, so a lot. If you look at we kind of filter down and kind of 8+ years remaining, kind of focus on more of the new construction stuff. There's 157. You contrast that to last month, we were at like 147. We had 28 that went off market, but we picked up another 38. So plus 10, in the last
absorption.
month. So not pulling enough of those off the market. Cap rate ranges are still pretty consistent with what they look like last month. The high cap is 6.6. Median's right around 5.85. That 5.85 is what we're tracking last month. The high caps dipped a little bit. So that 6.65 or whatever that was out there last month got picked off. And that's pretty consistent with what we're seeing.
Yeah.
With Starbucks, you've got to really adjust the price and the yield on the cap rate in order to attract investors in kind of less attractive markets. Or if they're in a great market, then those are trading as well. But it's still kind of a slog with Starbucks. What do I have next? Chipotle.
Had that for lunch.
Still, I think they still sponsor the show, but Chipotle is same thing, pretty consistent with what we saw last month. With them, there's 49 on market. Last month, there was 45. There's 10 that sold or went off, and then we picked up another 4 or 14 total, so a +4. So a little bit above what was taken off the market, but 4 higher than where we were last month. Cap rate range is still pretty consistent. 5.75 was kind of the high cap out there with those guys. Median's still at 5, and then there's still some more aggressive stuff in West Coast at 4 caps. So pretty
good.
Pretty consistent.
Yeah, we sold one last month.
No, we didn't. We sold to Arby's.
And I thought a Chipotle sold.
It hadn't sold yet. They're waiting for CO, and then it'll close.
I misspoke.
Soon.
Knock on wood. It's coming.
We'll be giving our burrito back.
Yeah.
And then 7-Eleven's the last one we kind of track. That one, again, similar ranges that we saw last month. Number on market right now, 59. Again, there's more than that. The way we track them is kind of 12 plus years, new construction. That same kind of profile last month was 53. 4 sold, and then there's a new 10 that came on the market. So, still increasing inventory, but nothing like it was, 12, 15 months ago. Cap rate range is still, it's dipped a little bit. There was a 5.65 on the market last month. Now the high cap's 5.51, medians in that 5.15 range. But they've slowed down a little bit. A lot of them bigger.
Are these
price
ground
points.
leases, or are they?
No,
they're full building leases.
They're full building, build-to-suit leases. So depreciation. There's a couple ground leases that get done every now and then, but for the most part, they're not doing ground leases. So full build-to-suits.
Okay.
And then I guess 10 years, something we're watching pretty closely. It was bouncing around, I think, high 4.3s. Earlier today, when I looked, the high this month I think it hit 4.48. It got down as low as 4.01 earlier in the month.
Yeah.
But, last month it got up to 4.38. I think 4.16 was the low for last month. So hoping that 10-year comes down. But, it's all over the place right now still.
Does, okay, so Trump acted like he's going to get
Jay Powell?
No, he's all over that dude.
Yeah, he's like on his ass.
I don't know that really does anything for us, though, because last time he lowered rates, nothing happened. The 10-year went up, and all that stuff went up. But he was talking about how, he's going to bring back bonus depreciation, and then said he's going to get rid of capital gains. I mean, that'd be legit, but I don't think that's going to happen. But I don't know, is there any sentiment from buyers that that's going to happen? And
I think the thing that, I feel like I've kind of hit on some of the same stuff because there's a lot of the same themes out there. But if you look at what's going on or what you see right now, there's just so much happening. It's like I think there was a ton of, end of the year was pretty positive. We saw some good momentum. Beginning of the year, I think it was pretty positive. And then all of a sudden it's like, wham, we're going to do all this stuff at once, you know? And there's just so many different things going on when you're trying to negotiate 100 plus tariff deals with all these different countries. It's hard to understand, is that really the goal? Is there some underlying things that are happening? We're trying to, is a lot of it to ultimately get to China and negotiate a deal there. Is, you hear, like Kyle Bass will get on, whatever financial outlet you listen to, and he's talking about how a lot of this is more of how do we stop fentanyl? How do we put pressure on these other countries? And we're using tariffs as some of that. But I don't know. It's pretty crazy how many different, with all the tariffs that are going on, the war still in Ukraine. I read some guy the other day, and it's the first time you hear about uncertainty and everything, but he had talked about, he called it FUD. And I was like, FUD? And he goes, fear, uncertainty, and doubt. And there's a ton of that in the market right now. I tell people the worst thing for our business, we're very transactional. Like, we're not doing deals, we're not making money. So the worst thing for our business is FUD because it just screws it up. People, when there's that much uncertainty in the market, people just stop transacting. They're like, hold on, let's wait and see if what it looks like in another month or another quarter, or hopefully not next year. So I think if to your point earlier about the pushing through some of these tax cuts or extending them, like that would help alleviate some uncertainty. That would bonus depreciation we're watching closely is part of that. That would alleviate some uncertainty. Getting some tariff deals would alleviate some uncertainty. The war and all these other things. There's just a lot of it in the market right now, and
a lot of themes.
A lot of themes. And most of the transactions we're doing are with individual investors. A lot of them in 1031 exchanges, which there's not as much velocity in that sector right now. But even we'll do stuff with high net worth investors that just have a lot of cash. And we had a transaction here in the last couple of weeks where somebody was buying something. They weren't in a trade. They're all cash. They just kind of like the yields. And with what's been happening in the market, the stock market, with it fluctuating up and down, psychologically, when people, even if they've got a lot of money and they like a deal they're pursuing, when they go look at their portfolio and it's been hammered for the last week, sometimes they take that same approach. Like, you know what? I like this deal, but I'm just going to stay in cash, or I'm going to stay, in my current position until it improves a little bit. So we're seeing some of that as well. So I think we need some calm in the market, which I don't know when that happens. If that's, in a month, in 90 days, I don't know how far along we are on that extension, but we need some calm in the market to settle things down, I think.
So the FUD on the buyer side, but I've seen it on tenant side. I don't know if you've seen this, but like we've seen, we had a deal, we were working with a developer, and he's been working on it for years.
A year, well over a year.
And he, they get a new CEO. Did the tenant get a new CEO?
There's a change in the C-suite as the COO.
Okay. And the COO was like all real estate projects.
Right.
Done.
You know what I mean? And I think that's, I would assume, are you seeing that happen across some tenants, Rob?
We are. I mean, we've got a fashion retailer that's looking at Dallas. They get 80% of their clothes from China.
Yeah.
And, we've got a deal teed up. We're still pursuing it, but you can tell there's some hesitation on their side of like, well, we don't exactly know what our deal looks like in 3 months. And so I think we haven't seen the pullback yet, but I would say the majority of what we're working on right now is more restaurants, banking, things like that, where it's still business as usual, but
where those are products that are domestic,
sourced here for the most part. And so, or tariffs are not, directly impacting those today. But if you're buying supplies from China, I think you're very hesitant right now of like, what does the future hold in 3 to 6 months?
Yeah, it's hard to put projections on.
And you're signing a new 10-year lease.
Right.
Yeah.
Not knowing what's happening in 6 months. It's like much less in 10 years. We don't know what that's going to look like.
Yeah.
SOL.
All those tenants too are like, it's funny. We'll hear from developer clients, same thing, where they get somebody new in the C-suite, or with some of the stuff we're talking about with tariffs, anything that may change their revenue model. And the worst thing you hear from them is like, oh gosh, we got a new model. We got to go plug it in and see, are the returns there before we're committing to a deal?
We got a new model.
Yeah.
That translates into shit. My deal just got vaporized.
That's like, well, we were doing the equipment rental side. We were a victim of mergers and acquisitions recently.
Yeah.
I mean, I don't think we were never under an NDA on any of them. I don't think
it's public knowledge.
It's public, like H&E and Herc, and we're working deals with all those guys.
Right.
Well, and United bid to buy them.
And then that
our deal
vaporized.
halted. Then Herc stepped in. That halted.
Yeah, we kind of
signed an LOI with Herc on a site.
Yeah.
Then they killed all of Texas.
Yeah.
The M&A deals are tough because if it's, we've seen this in collision repair and C-stores and, like you're saying, equipment rental. Like when they don't have a big presence in the market you're developing in, you're great, because sometimes that'll kind of, set a fire behind it, where they're like, all right, now we've got a foothold, we're going to grow around it. where you're in trouble is where there's a lot of overlap, and all of a sudden those guys are like, whoa, everything's on hold. We got to digest this whole M&A deal and figure out where's too much, which ones are we closing, which ones do we need to build around, where's the growth. And so those are tough. Those are really tough.
Yes, we're very aware.
Yep.
It's fun.
Poof.
Boom goes the dynamite. When the news came out, the brokers call us like, oh, so what do you think? I'm like, it's done. It's dead. Like, what? I'm like, you get on the horn.
Yeah.
Because it's DOA. You just don't know yet.
Right.
We talked about this another time when like private equity gets involved with OpCo, and it's like, there's some dude in Harvard trained who wants to skin us.
Yeah.
Not interested. Next.
Yeah, I think that was Walgreens.
Yeah,
we were talking
that
about
was
with
the Walgreens.
Sycamore Partners.
Yeah.
That's full steam ahead.
Yeah, so Walgreens is kind of finding a tenant here or there, but like that tweet you said.
So I thought that was interesting. You know, that was an old CVS that was down in Florida, right? They put in a Dollar Tree. Makes a ton of sense as a reuse for the building, right? Square footage is right, not parking intensive. That checks all the boxes. However, that's rent is at $16.50 a foot, flat for 10 years. And then you get a 50 cent per square foot bump at year 11. And then every 5 years after that, 50 cents a foot. So I don't know what CVS was paying, but I guarantee you it was more than $16.50 a foot.
Yeah.
So, you know, we've talked about this multiple times. What do you do with those buildings? Like, well, there's the right answer on the use, but they're not going to pay anywhere close to CVS was paying on a build-a-suit on that deal. They could have been $35, $40 a foot into that building, and somebody just released it for $16.50 a foot and is now taking it out to market.
So I kind of wonder, so I was thinking about this the other day. I was driving down 380 to 75.
Okay.
And Dollar General had repurposed a Walgreens there.
Yeah, CVS.
Or CVS.
Yeah.
And I don't know, Dollar General just seemed out of place.
It is. So the difference with that is that those are corporate subleases. So they've gone to the Dollar Generals, Dollar Trees of the world and said, hey, here's the 300 stores we're going to close. Do you want any of those? And that one in particular was probably just part of a portfolio acquisition. And, you know, Dollar General subleased that for a fraction of what CVS is paying. But, you know, CVS takes a write-off on the lost rent, goes dormant on that location, and everybody's happy. Now, you know, what they probably, that was a new deal that had only been open for maybe 3 years, plus or minus.
The CVS?
The CVS.
Oh, my goodness.
So, you know, there's 12 years left on that lease. They're not going to grant Dollar General any extensions past that primary term, or it sets to whatever that actual option rent is.
Yeah.
But for the next 12 years, at least CVS can reduce their exposure. Somebody's operating in the building, so nobody's going to steal your copper. Nobody's going to break your front windows. You know, it gets rid of the security risk as well. Because think about, you know, operating 300 dark assets around the country. How do you keep those protected? Well, you get a tenant in there, even if they're not paying the full boat. At least that eliminates some of your risk.
Get a warm body.
You get a warm body in there. And you keep your copper.
Well,
so, I don't think they're stealing copper in McKinney, but I think
dude, you'd be shocked.
It's like moths to a flame. A vacant building just they attract so many problems.
It's not a if this happens, it's just when this happens.
Yeah.
It's but like I guess what I was trying to say was like in McKinney right there in 380, Dollar General didn't seem like it had a market there.
Correct. Now, what the reason I talked about the portfolio is maybe that was one they just so
cheap.
They got it so cheap, and maybe they weren't getting any other hits because it's a good site, but it's on its own, right? You got a car wash across the street, and then you got residential. There's no other retail at that corner. Same thing. I don't know who else is taking that space.
Yeah.
I mean, it's a hard corner, signalized. I get all of those things, but outside of a drugstore, maybe a convenience store, I don't know who else takes it. And CVS isn't going to let you come in and drop tanks in the ground and do all of those things on a sublease. So you're really, your list is very, very small of folks that are courting corporate CVS to take those. So maybe that was one that didn't have a ton of interest. And it was like, hey, if you want these other 50, you're going to take these 5 that maybe the demographics aren't perfect for Dollar General, but we got to get a warm body in there. So we're going to do this. And Dollar General, the risk is so low.
Yeah.
I mean, they come in and slap up some shelves and a new sign. and you're up and running.
business.
I mean, you're not spending a bunch of money on that facility. So
No.
it's a low risk proposition for Dollar General.
Yeah.
And I'm sure they have the ability to go dark, and maybe it's, a shorter term lease, whatever it may be.
Yeah.
But I have a feeling that was, hey, if you want these 50, jewels that you really like, you're going to take these other 5 or 10 that are kind of marginal real estate plays, because we have to get somebody in there and we've got no other interest on the site.
Call that diamonds with the poo-poo.
Yeah. Diamonds with the poo. Yes.
Yeah, we're doing that in our portfolio. We're working our portfolio sale, and we put a diamond in there. We put some.
Yeah, and we've inhaled some too. We try not to, but it's like sometimes you're just like, you got to eat that one.
Yeah.
Right.
So we've done it both ways.
Well, and speaking of portfolios, something that was interesting, we haven't seen this in a while, but like Washington Prime just came out on a big portfolio sale. They've got some fantastic assets, from Scottsdale Quarter to one in Oklahoma City. They've got 4 power centers in Texas that are all on the market, a couple in Atlanta. So you've got some really A+ stuff, including, let me rephrase that. Not owned by Washington Prime, but part of Diamonds coming out, this Legacy West is under contract right now.
Legacy West is under contract.
Wait,
so
what part of it? The retail?
The whole thing?
The whole thing.
No, even the multi?
So you've got 400,000 square feet of office there. I think the multi is a different ownership group. So I think it's the office and the retail component. And I don't know that the multi is a part of that, but Invesco owns that deal. They've taken that out. It's under contract currently, and it's supposed to close relatively soon. But
who has it under contract? Do you know?
Come on.
I don't know that that's public information, so I'll keep that close to vest, so I don't step on anybody's toes. But yeah, I mean that's a big deal. That's one of the top mixed use developments in the country.
Nation.
Oh, easily.
And
very successful.
It's like the model.
Can you say price point?
It's not my data, so I don't want to share that. I'll tell you when we we stop recording.
It's a big number.
It's a big number.
Sure it's huge.
Yeah, I don't want to put that out there, but it's a very big number, and it's a buyer that makes a ton of sense. And so that'll be a great portfolio.
It's me.
Yeah, that's right. Yeah, the guys in the room. The guys in the room.
Jeremy and I are 1031ing out of Oklahoma City into this.
But we're starting to see some of these big centers that I think folks hung on to for a long time and thought, all right, well, I mean, at some point, if we're going to monetize this, maybe now is the time. And those A+ assets just don't trade that often. And so I think you're going to create a buyer at the right scenario, no matter what's happening in the economy.
Yeah.
As our term of the week one time was, I echo that, because we like our prime stuff.
Yeah.
The interest level for lease and for sale rips.
Right.
Mm-hmm.
Like it does really well. The stuff that's kind of it's sitting right now.
Yeah, it's tougher.
We got to tell a really good story to motivate somebody to buy or lease it. So
I've said it before. It's buy the best the first time, and it only hurts once.
Yeah.
And it's one of those, you buy the right real estate in the right place. It's like it's going to catch up to you, even if you've got some headwinds for this and that.
Yeah.
But it's when you stretch and you go to a secondary market or you go to a secondary tenant that, we've got a listing out in Wiley, and it's this lady that 1031'd into a Highway 55 restaurant, which you've probably never heard of, but there were 3 of them in Dallas. She bought it. She closed in July of last year. They were bankrupt and vacant by November.
Ugh.
And they closed all of them across the board. So like 78 corporate locations gone. Had a personal guarantee. Well, get in line, right? The guy's already liquidated all of his, strong assets.
Yes,
right.
And he goes bankrupt. And so, this poor lady lives in Las Vegas, and she now owns a freestanding vacant 2,500 square foot building in Wiley. And it was a turnkey build-to-suit. So Highway 55 was paying $200,000 a year for this building, which market rents, I mean, that is off the charts. You can't even get close to recouping that. And so now we've taken it out to market, and I mean, we're scratching and clawing to get back to maybe 150. And so, it's buying the right asset in the right market with the right tenant, right? And Highway 55, personal guarantee or not, 78 stores or not, if they close down in the middle of the night, what are you going to do? And now, at the time she was scrambling, right? She's got to turn the power back on. She's got to hook the propane up. She's got to do all of these things. the freeze is coming. So she's calling me from Las Vegas, scared out of her mind.
Rob, what do we do?
Oh, yeah. And so it buy the best the first time, and it only hurts once.
She's got to go get insurance and pay the taxes and make sure taxes aren't, owed. Yeah.
100%.
That's not fun.
I thought this was all passive income.
It only goes up.
Yeah.
Oh, man.
Oh man, what was I going to tell you? God, I lost it. Anyways, sorry. This was something I thought was interesting the other day, and we talked about this the other day. I didn't realize Fidelity Investments bought real estate. But they just bought a power center here in Plano.
Off of Parker.
Yeah.
That way.
Yeah.
Yeah.
I didn't realize
Pretty
that.
big deal.
You got to diversify.
I have my brokerage account there, but they've never called me for my opinion on real estate.
You're already on the LP side of that deal. You just didn't know it.
Yeah. I don't think they offer that alternative to guys with accounts my size.
Yeah. That's funny.
Yeah.
So
some other news that I thought was kind of neat. The restaurant sales information just came out. So the top 100 restaurants in the country, that was just released. So number 1 in Miami Beach, Joe's Stone Crab.
Oh yeah, that's a classic.
Doing $50 million a year in sales.
Can I say
I've never
something?
been there. I go to Miami all the time. I've never been there. Overrated.
Oh, come on.
I'm sorry. I was just not impressed.
I just never make it that far south, down South Beach. I always say I'm going to go, and I just never make it. I make it to about.
I went 2 years ago. Not impressed.
So
have you been?
I have. Well, 2008, we went when Florida played Oklahoma in the national championship game. And we show up to Joe's, and I've got a $100 bill in my pocket. And I'm like, all right, I'm going to tip the maitre d', see if he can get us a table a little bit earlier. Because we show up at 5 o'clock, and there's already a 2-hour wait.
Yeah.
And so the guy in front of me steps up and goes to hand the maitre d' some money. And maitre d' goes, I make way too much money to accept your bribes. And I was like, okay, my $100 is going back in my pocket. So I put our name on the list. It's going to be 2 hours. And we walk up to the bar. I went to high school with the bartender.
Oh, wow.
Sonia, how are you? What's going on? She's like, hey, do you need a table? I'm like, yeah. She's like, come on, follow me.
Wow.
We sat down right away. We had an amazing dinner and had a great time. And so that was the last time I was there. That was a long time ago, but I had a great experience.
Yeah, I just thought it was okay.
Yeah.
But
So
you got to go.
So they're doing $50 million a year.
Wow.
So number 1, again, this is released data. I don't guarantee these numbers. This is what was published.
I hope they own their real estate, or else they're on percentage rent and somebody's made a lot of money.
Yeah. So you've got a couple other highlights here. So 11 Madison Park, doing $30 million a year in New York. That was number 10 on the list. Maple and Ash in Chicago was number 5 on the list, doing $35 million. The number 1 Dallas location on the list was Nick and Sam's.
Of course.
Not surprisingly.
What kind of volume?
25 million. And then you've got, let's see, Gibbs.
Dude, that's a lot of money, man.
Yeah, that's a lot of money. There was a second one in Dallas, was the Monarch they're showing 23 million. Yep. So Monarch is crushing it.
Good.
That's good.
We'd like to hear that.
Yeah. Then you've got, this is close to home for us, Haywire in Plano, doing 18 million.
Wow.
Yep. So that put them as 48 on the list. And then close to my boy Mercer in Irving, the ranch at Las Colinas.
What?
Doing $14 million.
Wow.
That's a lot of happy hours over at the ranch.
That is.
Think. Yeah.
It is.
All those corporate offices over there, I think, are piling down for dinners and drinks. And
have you been there?
I have.
All the animals on the walls and stuff. It's fun.
It's similar to, I mean, obviously it's the same group as Haywire, but it has that same kind of feel to it. So I think if you can execute that without being cheesy, there's a big hook to that here, right? People travel into Dallas, they want to go somewhere that feels Texas. Yeah. I can't tell you how many clients we've had that have come into town and are like, either A, take me to barbecue, or B, take me somewhere that feels like Texas.
Right.
And Haywire, the ranch, those definitely check that box.
Yeah.
And I feel like they do it well. It's not a cheese factor to it. It's got a good vibe and flows well, and the rest, the food is great. So
they always like Nick and Sam's too.
Yeah. Everybody likes Nick and Sam's. So we had a client come in from Chicago. We did a closing dinner. This was back in probably 2021. Chicago at the time was still like almost locked down, right? Everybody's 6 feet apart. And he shows up. We go to Nick and Sam's, and I mean, you are elbows to assholes, right? It is packed. They're bringing in tables and squeezing people in. And he's looking at me and he goes, what in the hell is going on here? He goes, if this was in Chicago, he's like, the cops would be kicking in the front door, like closing this place down. He said, this is amazing. And we had a great dinner, a great time. But it gets, I feel like it's gotten louder in there. Every time I go, it's hard to even carry on a conversation anymore. The guy's playing Happy Birthday on the piano 100 times. But it's a vibe. They do a good job.
The cotton candy
There's
coming through.
It's pretty fun to watch the prostitutes at the bar there.
Yeah.
There's so many of them.
Yeah.
You're like, oh, you are so working right now.
Yeah. We used to do my wife's birthday there. Like, I think we did 3 or 4 times in a row, and it just got too loud. You can't
have a conversation.
We go with 2 or 3 other couples, and like you're screaming at each other the entire time.
Yeah.
What do people still have closing dinners?
Ooh, we try to on big deals.
Yeah.
Just a celebration thing and a great reason to get together and try to find your next deal. But I feel like it's a lost art.
I don't think anyone's even taken us to lunch.
No.
And if they do, they look at us to pay the bill.
Oof.
Really?
Well, I've been iterating this because you and I had a very similar experience with a group. And I always tell guys that we'll pay until we close. But like after that, you're front but it's still.
Even after we close, they go, to pay?
We went to one closing dinner in the last 3 years.
Yeah. Out of all the deals we've closed, one person is taking this.
And I thought it was happy hour.
It was kind of happy hour.
Which is fine.
It's fine. But at least they tried.
Yeah.
But yeah, no one does closing dinners anymore.
I used to go to so many pre-COVID. It was like at least one a quarter.
Yeah.
Yeah. Nick and
Bring
Sam.
it back, guys.
Yeah.
Hey, I'm all about it.
Get that right off, guys. Maybe give you another Scooby.
Some other stuff that came out. So the sales report for last year came out on retailers. Interesting note. So Costco, their sales were up 9%. Gross margin flat at 10%, which obviously you've read about in the past. Everything gets a 10% markup. Amen. Alternatively, Walmart was up 4%. Their gross margin is 50%. Just to put it in perspective. Then you got Urban Outfitters, which was one of the higher increases. Their sales were up 10%. Their margins 300%. Wow. Another one interesting. Home Depot up 14%.
Yeah,
their margins are only 5%.
Ugh.
Yeah, so you gotta sell a lot of lumber to get those numbers. But I thought that was interesting. The TJ Maxx was down just slightly, just under 1%. Their margins are 100%. And then Nordstrom was down 2%, but their margins are 290%. Foot Locker down 6% with 300% margins. So it's kind of interesting. Some of the ones that have the lower margins are showing the higher comps.
Yeah.
Chipotle sales were up 13%. And then you had the leader on the fast casual restaurants was Cava, showing 23% increase in sales. Their prices raised 15% as well. So costs are going up, sales are going up. They're doing well. Interesting note, the Cava that opened in Forney, Texas, was one of the top sales producers anywhere in the country outside of New York City and uptown Dallas. Forney, Texas was right there on the list.
I don't have a lot of options.
They don't have options. So that brings up thinking about restaurants, which we spend a lot of time on, the idea of pent up demand with good incomes, right? Yeah. Like, hey, people want to go out to eat. They just have very limited options. And obviously the fast food guys are always the first into the market, right? Whether it's McDonald's or Whataburger, what have you. And then you get the Subways of the world and the Domino's. Those kind of are the leaders most of the time, outside of obviously the local groups. Those are kind of leaders into these emerging markets. Well, then all of a sudden when you get unique concepts coming in, we put Cane Rosso out in Saxe. That's the best opening they've ever had, right? So Cane Rosso, that was kind of a stretch for us to go to Saxe. The city leaned in to help us make that deal. We got a great spot with a beautiful 1,200 square foot patio. Their sales have been off the charts. They're on an hour and a half wait on the weekends. you've got great incomes, you've got families, you've got decent density out there, and just little to no competition. They had a Domino's and a Little Caesars, and that was it.
Yeah.
So now all of a sudden you get something that you can go on date night or family night, and it packs them in. And I think, in the future, as more and more competition comes into the market, you're going to have to strive to try to keep those numbers up. But for the time being, I mean, they're absolutely crushing it out there.
That's great.
I can't wait to be at the Star one time and someone goes, "You can go eat at Kay and Russo's," and I go, "Kane." It's Kane.
Yes. Yes.
I highlight Home Depot really quick.
Yeah, come on.
I read this thing. It caught my eye because I've been doing a lot of yard work. But I guess Home Depot, the nursery part, the garden center, has been ripping on sales.
Yeah.
And so this year, I don't have the Wall Street Journal anymore, but they reported Home Depot may be one of the nation's go-to destinations for residential renovations, but sales in its gardening business are now surpassing lumber, paint, and appliances. Last year, they raked in $20 billion in revenue off the garden center component.
Wow.
Compared to Lowe's. Lowe's did $7.37 billion.
I think there's a lot of margin in those.
I'd imagine.
Yeah.
I mean, what's a bag of soil cost? I know what it costs. It costs $267 for me to buy, but what's it cost for them to move it?
Yeah.
All in $1? I don't know. But
well, we always joke about in Texas, you get that fake spring, right? Where it's everybody's, the weather's nice. Let's go plant a bunch of stuff and get it ready. And you show up to Home Depot or Lowe's, they don't have inventory yet because they're like, where it's not done. We still have a freeze coming.
Yeah.
We don't want to lose this inventory. And so they got to time it right on
That
when everything starts rolling in.
A couple of weeks ago.
Oh, yeah, totally.
I swear to God, we went and bought, Tammany made me go get flowers with her. And then 4 days later, she goes, "Hey, we got to cover these up." I'm like, "Are you kidding?"
yeah, it's true.
The freeze is coming.
Yeah.
Yeah, I think those nurseries are, you've got the one that's come into town recently is I think it's Moon Valley.
Mm-hmm.
Yeah.
I think private equity backed and trying to grow, but, Callaway and some of the others. But I think
Not
the margins
right now.
are really strong.
Yeah.
That's the tenant we were talking about that halted a deal.
Oh,
that
really?
We were going to find.
Yeah.
Which one?
Moon Valley.
Oh, Moon Valley.
Yeah.
Really?
Yeah.
We've looked at doing a deal on our retail side, on the fund side, and on the industrial side. They targeted two of our acquisitions
Because of merger?
Changing C-suite.
Oh,
Change the
got it.
C-suite.
Okay.
and I'm not
Interesting.
sure why his. There's always a new guy, right? He's got different, but I don't know. There really wasn't a lot of clarity on why.
Okay, interesting.
Did you see the one they opened at Lake Forest in 380 up by us?
Yes.
Yeah. It's a nice facility.
Yeah.
They did a great job with that.
Yeah.
They do really good jobs. So this one was kind of disappointing, but
Yeah.
And then I thought it was interesting. Forever 21, their bankruptcy package came out.
Yeah.
Of groups that could come in and assume those leases. So a lot of those are percentage rent only leases. And they've got spaces that are 5,000 square feet all the way up to 40,000 square feet. But I thought it was interesting. I mean, you signed a deal with Forever 21 to take a anchor at, Deerbrook Mall down in Humble, 45,000 square feet, and they're paying 16% of sales. And now they're auctioning off that lease to the highest bidder that wants to come in and assume that. And, if you're the owner of that mall, it's like, well, wait a second. I didn't want to make a deal with this group. I wanted to make it with Forever 21 and try to bring in young families and women and the whole thing. And so,
But how does that work? Because if Forever 21 sales are zero and they're on the lease, does the new tenant have to then partake in percentage rent sales?
Correct.
Or is it still Forever 21 who's forever never making a profit again?
Forever zero. No. So I think when you would assign that lease to the new group, whoever that may be, Burlington or whatever it may be, they assume that lease structure. So they're going to pay 16% of their sales. And I mean, you've got some, like there's one at Westgate Mall in Amarillo. It's 11,000 square feet. That's 4% of sales. So, you can tell the landlords that really got desperate to try to make some of those deals.
Yeah.
And, now you'd sit here as a landlord, you're probably looking at this list going, man, I undersold myself. I should have fought for a larger percentage. But it's an ongoing theme. I feel like every month we have this conversation, just the value that these leases hold, even when the parent company is struggling.
Dude, we all went on a field trip the other day because we'd been talking about malls. I was like, I want to go I want to go across the street to Willow Bend.
Mm-hmm.
Buddy.
Dude, we walked in there.
Ghost town.
Like,
Yeah.
I'm shocked there's like even businesses like why would you even be there?
Yeah.
Like,
I mean, you've got art galleries, you've got knife sharpening, you've got, cigar lounges. Like it is, the worst thing that happened to them was when Apple pulled out. That was really their last hope of having any sort of long-term success. Now that entire thing is up for redevelopment. Centennial's bought it. They're going to add multifamily. They're going to rip off half the mall and kind of start over. Yeah. It's a great location.
Yeah.
Right?
Oh,
I mean, it's fantastic. But historically, outside of Neiman's and Restoration and some of these other groups, it just has never really performed.
Yeah.
And then once you lost Apple, that was the nail in the coffin for them. And it has steadily declined ever since. But now most of the guys that you see in there are on short-term leases, redevelopment clauses, and they're going to blow that whole thing up and kind of start over for the most part. But
I was like,
no man's land.
Let's go eat lunch at the food court.
Did you go to where?
There was nothing open.
Nothing.
They were all,
it was all closed.
It was, yeah.
Did you get your knife sharpened?
I didn't even see that option.
I think
the
I
guy
did.
does a great job. I've taken my kitchen knives there before. He does a fantastic job.
I think I don't know.
The funny thing is the only thing I found in there was my wife. Literally, we were walking through this. She walks right past. I go, "What are you doing here?" She like had a doctor's appointment nearby. She's like, I thought I'd just stop and walk in here real quick. I was like, the same day we decided to. I go, well, it's a good thing you weren't walking around here with some dude.
He had already peeled off 50 yards back. She
But
saw you.
it was sad.
It was.
It was really like
I didn't believe it was that bad.
It's bad.
Like,
when's the last time you've been in there?
have you ever been in there?
the day after I got LASIK, the day I got LASIK, I went and got some sunglasses in there. And that's when I lived right behind it.
How long ago was that?
15 years ago.
That's the problem.
Yeah.
Yeah. There's your root cause. A guy who rides that tollway how many
Drives
times
by
a day?
Every day.
Yeah. Last time you were in there was 15 years ago.
Yeah.
That's not good.
No.
But Stonebriar Mall is like
So
rocking like 1994. You know?
Go to Stonebriar, go to North Park.
Yeah.
Those are really the two crown jewels in Dallas. Obviously, Galleria has significant traffic, and they've done a good job with the Netflix house coming in there.
Yeah.
And some of the other groups.
Is that
are,
up and running yet?
No, it's under construction though.
Okay.
That's a done deal. And so they've done a pretty good job of kind of hanging on, and they've got some
That
Class
one's
A
kind of like
tenants
what
in
you're
there.
talking about. They're going to try to keep reinventing.
You have to
get
you
people in there.
I mean, when Belt closes, what are we going to do with this anchor?
Right.
That prospect list did not include Netflix, but when Netflix came to the table, it was like, all right, let's do this.
We're making your deal.
We're making your deal. Because, I mean, that could draw from a 5-state radius of folks that are coming in. And, hey, if we're going to go to Dallas, I want to go to the Netflix house because I love watching X show or whatever it may be. But I think if you've got that kind of square footage to lease, you've got to find some alternative groups that can come in and take that space 100%.
Yeah.
But I mean, literally, those are your three very successful malls. And then the list drops off big time on everything past that.
Whew. Well, the good thing about Galleria is it's also got the Westin kind of tied in.
Sure.
So you've got kind of a captured audience, I guess.
You can stay at the Westin, you can have dinner at Ocean Air, or Grand Lux or whatever it may be.
Like Ocean Air.
Yeah.
I haven't been to one in a long time, but the American Girl doll store moved from
They went to Park Lane.
They went to Park Lane.
Yeah. IKEA just announced they're going to Park Lane too.
Yes, I saw that. And I was like, that kind of doesn't fit, but I guess.
IKEA, if you're trying to capture core Dallas, where exactly
you gotta go here to and it's a pain in the butt,
haul,
dude. It's awful.
So it's an alternative type site for them, but I think it's a great solution to capture core Dallas. And I think it's a great user for the landlord. It's going to generate a ton of traffic. Everybody can go get their meatballs and walk around Park Lane.
For where my kids are at in life, like you don't buy expensive furniture. It's like you get the $25 chair, right? Because they're just going to destroy it. But it was a pain in the butt.
Yeah. But I think going back to the American Girl store, I think that was actually a very successful reload for them. I think they reduced their operating expenses significantly. And I was there probably last month, and I must have seen 8 families walking around with American Girl doll bags.
Okay.
And so I think they're generating a ton of traffic. we've been told that was a very successful reload for them.
Yeah.
Were they getting kicked out because North Park was getting?
I think that my understanding was their lease was up for renewal, and they had to make a decision, right? Yeah. And I mean, I'm sure you've got the landlord for Galleria cranking it up, and alternatively, you've got Park Lane who is courting you, like there's no tomorrow, trying to get you to come over. Yeah. And so, I mean, that's a center that when they first opened Park Lane, they did not envision that as kind of an outlet center or alternative real estate. But now you've got the Bloomingdale's off price, you've got Saks off Fifth, so they've added some of those higher end discount operators there. They've been very successful, and kind of same thing. It's like, where do you go in Dallas if you're an off price, operator that you need larger real estate? It's very limited prospects.
Right. Yeah.
You're not going to get into North Park.
Nope.
So where are you going to go? And I think they carved out a very successful niche there, almost unintentionally.
Yeah.
And I think it works. You've got the multifamily there. You've got the office component. That's Starbucks on the park and Cava. Those do very well, kind of facing that little park in the center.
Whole Foods on the
backside.
Oh yeah. I mean, you and I, that's like right between where we all live. Yeah. It's kind of it's the discount brother to the thing across the street.
100%, right?
Like, it's
well, and that's kind of what I was asking. I'm wondering if there's groups that North Park's just like, hey, we're trying to upgrade.
Oh,
and they go move.
Foot Locker got kicked out, right? And so they ended up going. They ended up going directly across the street. Yeah. Well, North Park had just signed a deal with Nike to do a massive flagship there, and they're like, we don't need a Foot Locker anymore. Right. And so North Park does a very good job of always elevating their concepts. And if your sales are stagnant or showing declines and you're not doing the per square foot revenue they want you to, you're out of there.
Yeah.
And so they are diligent about keeping that tenant mix A plus. And a lot of folks don't want to leave Dallas, right? Like, hey, I still want to have a store here and I can't be in North Park. Where can I go? Well, Foot Locker went right across the street. So there's, without a doubt, I mean, to having a center that's open to kind of alternative retail concepts in core Dallas is fantastic.
Yeah. The American Girl store, I think Audrey did her last birthday, so it's June of last year or the year before. They all went, mother-in-law went, aunt went, my wife said it was dead. So I bet
to the new location.
No,
or the old
to the old one.
Oh, okay.
And I had gone in there to go get the doll like the week before, and kind of they had put a notice on the door already that they were leaving.
Totally.
And so I just started asking some questions, and it was more or less just right in line with that.
Yeah,
so
that was a build-a-suit for them. So that building didn't exist. They brought obviously American Girl from New York City.
Yeah,
that was their first ever Texas outpost.
Oh, really?
That was a ground up build. So I know they were paying a lot in rent. I'm sure they had a high percentage rent factor, all those other things. So it was probably a great chance for them to kind of reset, get out of there, reduce their exposure. And that's such a destination.
Yeah.
You want to be in core Dallas. But other than that, you're not going to not go to Park Lane because it's too far for you.
If anything, it's better.
More convenient.
Yeah. I mean, your demographic probably does not change at all. If anything, like, if you probably captured more of Highland Park if you were trying to angle to get that. But, you can't go in there not spending less than $250. So like you're going to go drop some money.
We've done it. We've sat there with our dolls and had ice cream sundaes and got their hair done and got their ears pierced and did the whole thing.
Yeah.
All I can think about is I'm so glad to be out of the American Doll.
I don't mind it. I think it's fun, but like you're just be prepared to spend $500. Yeah. Like easy. So, which is good for them. It's I don't know. It's interesting to kind of see that all unwind. So,
yeah. And then let's see a couple other things. The Wingstop I thought was interesting. They're showing 10% year over year sales increases. Those guys are absolutely crushing it. I don't know if you've seen their new office right off 75. So they took the old marketing arm and have redone that building. Big Wingstop signs on there. I mean, it is first class. And I think, one of the franchise catalogs just announced them as the best restaurant franchise, in the country. And they're doing a great job of kind of continuing to reinvent themselves, right? They've got thighs now, and then they've got tenders in addition to the wings. Yeah. You can get all those different sauces on the chicken tenders. So you can get one for the kids and then one for you. That's a little spicier, whatever it may be. And so Wingstop, kudos to them. They have done a great job of staying relevant and reinventing and getting stronger over time.
Dylan said the Richards groups that was in there, and you know, if you drive by at night, it was like rainbows colored on the stairs all the way up. I guess now Wingstop has
it's all green.
It's all green.
It's
pretty badass.
Yeah,
that's cool.
Yep. And then some of the negative sales on the restaurant side that were announced. I thought this was interesting. So Starbucks was down 6%. KFC was down 5%. Applebee's.
PFC.
What's that?
PFC. Plano Fried Chicken.
That's right. They moved the headquarters. Yes. I like it. It took me a second. I'm like, what? Applebee's down 4.7%. Del Taco down 4%. So, you know, you just, excluding Starbucks, you think about some of those stagnant brands that have just been around for a long time. But, you know, KFC is a good example. You know, they've now launched Saucy, which is the first one opened up in Orlando. I think they've got one in Miami. And basically it's kind of a souped up Wingstop, if you will, where you can eat there. It's not just to go, but it's a lot of different sauces and types of chicken sandwiches, you know, nuggets, tenders, that kind of thing. And so KFC is trying to find a way to reinvent. And in fact, the ones that they did in Florida, those were just conversions of old KFCs. That was the easiest path to get those things open. Well, if that hits, they've got very strong growth goals. They're in Dallas right now looking at deals, ground up construction as well. So, you know, that I love to see some of those brands that have been stagnant for a while trying to find alternatives to get creative and get out in front of a new prototype.
Are they still anchored with Pizza Hut? Do they own Pizza Hut, or wasn't it like Pizza Hut, KFC?
Yeah, so that was all Yum Brands.
Okay.
And it is, a lot of those groups are still under that umbrella. Okay. In fact, they brought in Habit Burger out of California, so they've actually added on to that fleet. KFC was obviously still based there. They've now moved their headquarters under the Yum umbrella into Plano. So yeah, all of that is part of the same family of restaurants.
I think the key with a lot of those guys is, like you're saying, with their new concept, they got to really figure out a way to get sales above 2 million, whether it's 2.5 or whatever it is, because I don't know how these guys, you can't go build freestanding building and be doing $1.2 million. Like it just doesn't make sense. You can't, the sales aren't there to support whatever that's going to look like unless it's an old, you know, tired building. But they're still got to go to even redo a building that's old and tired. You spend a bunch of money. So I think the key with those guys, like you're saying, with Wingstop and others, trying to either they're going to go, or with KFC, they're going to take end caps, or they've got to kind of refresh the brand and come up with something where they can go do 2.2, 2.5, or, you know, they want to do more. But otherwise, I don't know how they go freestanding and do new drive-through sites.
What, speaking of chicken, whatever happened with that Slim Chickens on the toll road in Frisco that was open for like 3 years and then poof?
Well, it was open for a lot longer than that.
Was it?
Oh yeah, they were there for a long time. I think their lease came up and it just wasn't doing the numbers to pay that.
I just remember seeing the OM to buy it. Yeah, I was like, it's kind of interesting. It's like a cool building, but I thought the access kind of sucked.
So yeah, you're literally, you got a mile-long stretch of frontage there. Now, the locals know how to get in there and circle back around. Obviously, that Rudy's does very well right across the street.
Yeah.
But you're really kind of mid-block right there. Yeah. And I think you've got to have the right operator that can drive the traffic there. And, Slim Chickens, to me, was just never a compelling offering.
Yeah.
They closed the one in North Richland Hills. They closed the one in Frisco. You know, I just don't think that they had a hook to keep you coming back.
Yeah.
You probably went there, you know, if your kids were playing soccer back behind there, and it was easy to run and go through the drive-through and get back out of there. But it wasn't good enough for it to be a destination type location.
Yeah. Has anything replaced that?
No, it's still available.
I think too, like they were behind, you know.
Yeah.
Chick-fil-A was first. Cane's came in and had a big presence. And then now all of a sudden you're going to come in and try to be another chicken concept behind those guys that had pretty powerful followings. And it's
totally,
I think you just look across the board, you know, restaurants are a little bit different, but you go look at retailers and competitors, you usually don't see more than two. there's usually not enough room for more than two. They start getting consolidated.
Yeah, and you get up to El Dorado in the tollway, and you got that Cane's that crushes it, and you got the Chick-fil-A on the south side that is absolutely blowing the doors off. They're trying to expand their site, add more drive-through lanes, and so to your point, to try to come in and steal enough market share from those guys, you got to have a great hook, and I don't feel like they ever did. It was never a compelling offering.
I feel like Chick-fil-A could put a store up and then put one right next door to it.
Well, yeah. I mean, they've basically done that along 380, right? They're every 3 miles now at this point.
Mm-hmm.
And all of those are performing well above company average. Yeah. You know, company average now is $7.5 million.
What?
Yeah.
Whoa.
Yeah. And so, I mean,
6 days a week.
Damn.
Yeah. So $7.5 million. And, you know, the one at Gates of Prosper, I mean, it's doing almost double that. And then, you know, even the new ones, they just opened at Custer. I'm not sure how that one is doing yet, but Lake Forest is well above that average. You know, 75 at 380, well above that average. 423 and 380, well above that average. So it's a great story to tell.
What's amazing with them is when you see now they've got older sites that are just busting at the seams that are on just an acre and a half but they're prime position. And they're saying, you know what, we're going to go over here, not quite as good a real estate, but we've got 2 or 2.5 acres or whatever they need to really pump those cars through the drive-through. And they're taking, you know, kind of a little less, the real estate in some cases just isn't as strong, but it's got all the other makeup and characteristics that really drive traffic. So
Preston and 121 in Plano was the northernmost outpost for Chick-fil-A for a long time. And that store absolutely crushed it. Yeah. Well, they were landlocked. You couldn't expand. You couldn't add the second drive-through. It was always congested right there on the corner. Great piece of real estate, but you couldn't make it any bigger. So they went across the street. To your point, they ended up going to the west side, south of that Eddie V's that's there on the hard corner. It's still a very good site, but it's not nearly the real estate quality that you had.
May not be the point position like they were in.
Now they've got double drive-through lanes. They've got excess parking. They've got all the things that they need to be successful. And I'm sure they're showing revenue growth out of that.
They'll probably do 30% better than where they were.
Yeah.
But several times I would skip over from the Chick-fil-A to go to McDonald's because I was like, I'm not waiting on it. I can't wait.
Yeah.
Well, isn't that an example? Like I've always, you know, when I started brokering in industrial, I would move people because I could get you a cheaper deal because there's so many industrial buildings out there. It'd be like, you would move to save money, which is, then it became, you only moved if your real estate was hampering your business.
Right.
And one way or the other, you needed to downsize because you no longer needed, or you needed to upsize because you could store more inventory or whatever. I mean, that's what they're doing, right? We can take a lesser location, but we can pump twice the volume through it. Like, who cares? Like,
Right. And, you know, they've been in that market now for 20 years,
so
right? It's not like anybody, it's not a surprise to anybody. There's a Chick-fil-A at Preston and 121. And if it's one more U-turn to get there, but yet it's easier to flow through and get in and out and exit out of there, people are going to do it all day.
Yeah,
absolutely.
And the reloads are too expensive on the builds to do it solely based on price. Yeah. Like that happens, maybe American Girl that we just touched on, but like outside of that, it's rare that it's really truly just a price decision. Yeah. It's got to be an operational push, either could be from a safety issue. It could be from an access, issue, whatever it may be, or facility needs a ton of upgrades. Like that's the deciding factor, not, hey, I can save 10% on my rent by moving across the street, because those new builds are just way too pricey.
Yeah. So one time Tammany went to Chick-fil-A in Prosper, and she realized that she'd been to Chick-fil-A in Frisco like a couple days earlier, and it's more expensive at the Prosper location.
Really?
They jack their prices.
Get out of here.
Yeah.
Interesting.
That's wild. Well, those operators are like, that's all they do, right? Yeah. They're not just some remote owner operator, right?
Yeah, you got to live there.
You live there. And I'm sure the guy who moved his 121 location, Preston, he's probably was like, that's a deal over there because I know my customer hates access, this, that, and the other thing. You sit in that location for so long,
right?
And you live and breathe it.
Yeah. Well, and like I said, he was the first one there. And then all of a sudden he got 6 in Frisco and 1 in the Colony and 1 in McKinney. I mean, he got hit from every different direction. And I'm sure, population obviously is growing off the charts, but at some point that had to really hit his pocketbook because those guys get paid 10% of sales. Yeah. It's all, whatever your sales are, you're basically taking home 10% of that revenue. And so, but you're in the store, 40 hours a week, both spouses have to work there. You've got to be married and have the family and the whole thing. And like that has to be, and it used to be you could only own 2. I think you can now have 3. And so,
wow.
Yeah. And especially if you had one like out in front of a mall, like Mesquite used to be the number 1 in Dallas. And that operator had the mall store as well. Yeah. And he had the other one in Mesquite. So he was one of the first to really have 3. Yeah. And all 3 of them were absolutely blowing the doors off. Yeah. And so they always joked like when he called corporate, they answered the phone. He was one of the top, you don't want to call it a franchisee. He was one of the top operating partners in the country. Yeah. And I'm sure he still is. But I think they're definitely up to 2 now. And I think there's conversations about them having the ability to go to 3 freestanding units.
Yeah. Because I think my dad looked at doing one at one point when he's just like, I was somebody in my family, and at that point you could only do 1.
Oh yeah,
that was like a big thing, and they were like, "That sucks."
Yeah, well, I mean, if the average store is doing 7.5 million,
tremendous.
You're taking home $750,000 a year.
Yeah,
that's not a bad deal. And if you can have 2 of those on
quit your real estate job and start frying chicken, dog.
Hey, you eat for free.
We had a good friend who was out in Lubbock, and he ended up moving to Atlanta to work in the Chick-fil-A real estate department. I told him, I said, man, you're missing the boat here. You just need to be an operating partner.
Yeah.
Let's go sling some chicken. You're going to make a heck of a lot more money than working in-house. But he loves it over there.
It's extremely competitive. It's like, you're more likely to get into Harvard, I think, than you are to get granted a Chick-fil-A location. It's like, I think it's a 1% success fee or something. Wow. Success rate.
Yeah. I mean, they're doing full background checks, and, they need the family to be your perfect prototypical family, and no ghosts in the closet, and it's a whole thing.
Okay,
Will's out. Will's out.
Al's good up until the ghost in the closet.
Real quick on Starbucks, we spent a lot of time on those guys in the past, but just some interesting notes. So their same store sales fell 4% year over year, and their decline in traffic was 6%. And some of the cafes, the non-drive-thrus, were down up to 8%. But I do think it's interesting because they have, obviously, new CEO has come in. They've got a complete turnaround plan. They've cut some of their prices up to 30% on some of the beverage items. And they've got...
Consolidate the menu, a little bit.
Yeah, and they've done a really good job. Like, my girls love now that they write on the cups.
Right.
Have Merry Monday and
someone
all of this.
Drew like a tree on mine today. I was like...
Yeah. But I think I have a feeling when we look at these numbers next year, it's going to be a complete 180 from what we're seeing today. They're really doing a great job of trying to, optimize their store menus and their customer experience and all of those things. So kudos to Starbucks for they could have just kept it going, right? They had a great story to tell, even as it was. But when you're seeing those declines, I think there was a call for, hey, we need new leadership with fresh ideas. And that's exactly what they've done.
Yeah.
Your CEO, flies from California now up to Seattle on the PJ. That's his daily commute, and then flies home.
Orange County.
Said he wouldn't move. So they come and get him every day.
Was it like $20 million package or something like this? Big.
It was a big number.
Big dollars.
Yeah.
That'd be awesome. That was your commute.
Yeah.
We get you a helicopter from Prosper down to here, Jeremy. You could just land on top of the building.
That'd be cool.
That would be sick.
Land in the parking
garage.
The helicopters are too. Every time you turn on the news, one of them's going down.
Yeah.
I'd stay away from the helicopter.
Thumbs down.
I wouldn't be allowed.
Yeah. Oh, yeah.
Yeah.
Well, cool. Anything else?
Man, my Florida Gators are national champions.
They are.
Yeah, congrats.
Thank you. I'm flying the flag today. Flying the flag. That was a lot of fun.
It was like a month ago.
They were tough.
Hey.
Yeah, it took forever to get this thing going.
No, I'm just jealous.
2 weeks.
Jealous.
Yeah. But that was fun. We went down to the game on Saturday. we came back up on Sunday for a cheer banquet I couldn't miss, and then went back down on Monday and came back Monday night.
Nice.
And man, it was just an absolute blast.
Were you on a PJ?
Yeah. Little Rob. There you go.
No, we were just glad to be there and back. It was convenient travel.
Yeah,
and made
of
a
course
lot of
it
sense.
is.
Made a lot of sense.
Of course
So
it does.
It was fun. We had a good time.
That's awesome.
So go Gators.
Go Gators.
Is that a good
How
spot
are y'all doing
to
in
watch?
transfer portal? Y'all retooling and
We are, yeah. We just lost one of our guards transferred to Kentucky, which
You
that
just got smarter though. There's a kid from Yale or
we brought in a kid from Princeton who was the
okay.
top guard in the
Yeah.
country. He committed to Florida,
Yep.
and we've got another kid that's right behind him that I think is going to commit. And it's crazy. I mean, we were the kid that just transferred to Aberdeen. I think we were offering him like $1 million a year. Kentucky offered him $3 million. And it's like, hey,
Wow.
I think coach is like, go get him, kid. Like,
Yeah.
take the money. Good luck. We'll see you twice a year.
Isn't that crazy?
Yeah. So the money has changed. And, once they get to rev share, all of that really starts to change. So like, this is your year.
Yeah,
This is the year
to make it.
Like if you're going to go after it, this is the year. Take as much money up front as you can get. Because I think next year, everything, or the year after next season, everything kind of gets blown
Is
up.
it this summer?
Yeah, July.
Yeah.
Like
So-
they just ended spring practice and their roster cut. Like Devin, he was sweating because his son's on the bubble of that. But
Yeah.
they called him last week before the spring game. They're like, hey, he's made the 105. So
Nice.
they had to cut 15 kids last week.
Wow.
Yeah.
How about the kid from Tennessee who
Hey.
tried to negotiate? And then they're like,
Yeah.
But I mean, like, the way he handled it is probably shitty. But I look at to his point, Carson Beck's getting $4 million.
Yeah.
I don't think Carson Beck's anything incredible.
Yeah.
It's wild. But
And
this,
then-
but
and
you're
then
right.
did he get-
That's why like
what did he
Tech,
get from UCLA? Was it 2.4?
No,
That's what
no,
he
he
was
got-
getting from Tennessee.
I think he got $1.4 million or something.
Yeah,
like
that was
that.
it.
It was way
He
less than
lost
what he was
money.
making. He lost money.
He lost
He
money.
overplayed his
asked for
hands.
4.
He asked for 4. He was making, I think,
2.4, I
Yeah,
think. is what I
2.4,
heard.
2.5. And he was asking for 4.
Ooh.
Tennessee told him to pound sand. UCLA was like, I think the only real quarter he had.
There's several that pulled back.
Yeah. And then they were showing with California income taxes, he was going to make significantly less than what he
Yeah.
would have made staying at Tennessee. And then to put a circle on that, or put a bow on that, the UCLA quarterback that had transferred earlier this year, he just committed to Tennessee. So they basically did a quarterback swap.
Wow.
And that kid had stopped somewhere else. I forget where it was, but he's like, all right, I'm out of here. I'm going to Tennessee.
man.
So they basically flip-flopped.
What's crazy is to see some of them in the portal and then they get new coaching staff. They bring somebody else in. I think this is going on at UNC. I think they had a kid come in mid-year. Belichick's got some other kid from, I don't know, a smaller school out of Florida,
Yeah.
D2 maybe or something. And the kid that just transferred in, he's like, all right, I'm gone. It's pretty crazy.
Well, it's we had our Tech's first 5-star ever left
Right.
transfer portal, went to A&M.
Yeah.
Left A&M in 2 weeks, back in the transfer portal.
Yeah.
And I think it's getting announced today he's coming back.
There you go.
No way.
So, but I think he's coming back as you're just a dude.
Ooh.
You ain't getting, you want to come
wow.
back? You ain't getting all that.
Well, what were they saying? Like 10,000 kids are in the transfer portal right now?
Well, I mean, there's fixing to be a ton,
Yeah.
right? Because you're fixing to dump off like 2,500 kids because Division I rosters are cutting down to 105.
Yeah.
And, and that's why Tech went bonkers in the portal this year because this is it.
Right.
Like, they're like, let's build it up as much as we can now so we can
Yeah.
build a brand to go forward with,
Right.
and hopefully this pays off this year.
The Pump Jack Mafia.
Pump Jack Mafia.
Yeah.
We need to trademark that.
We need to trademark
Let's
it.
do it.
Come on.
I'm serious about that because yeah. Well, let's discuss that another time.
Pause.
Yeah. So man,
Awesome.
me and Rob had Rob had a good idea the other night.
How many drinks are required for a good idea?
I was only at 2.
No, just that's a dangerous thing you've opened up there. It doesn't take much.
Yeah,
It's like you're halfway through one teeny and like we all got new jobs all of a sudden in this place. Everyone's doing different shit. You know, you give them 3, bro, this place is bonkers. You know, we're going to be fucking pumping out stocks on the phone. Like, you know, that's how we're
penny
going
stocks.
Yeah.
Strap no money.
Yeah, he's like,
2.0.
so we're going to merge Apple with Best Buy. And you're like, what the fuck? Like, how'd this happen?
Wait till Tommy gets here.
Oh, it's wild.
Yeah.
Well, that was as we were eating 30 pounds of crawfish. I think,
We were
Jeremy
crushing.
and I consumed.
Yeah.
Oh, that's awesome.
I was a little swollen the next day, but it was
Yeah.
well worth it.
It was.
A lot of sodium,
Well worth it.
but well worth it.
So
Awesome. Well, I appreciate it, boys.
All right.
Yeah.
That was
Thanks,
fun.
guys.
we'll see y'all next time.